How much potential does Synthetix have in the future? Let's find out. It's 2021 and as we can all see, the bull run is in full force. We're currently experiencing some of the most bullish price action for crypto as a whole that we've ever seen. A huge amount of institutional and retail investment alike is flowing into crypto, and it doesn't seem like this is going to stop anytime soon. All-time highs are constantly being set almost every single week, and the bull run is likely to continue for some months yet, especially considering the amount of Bitcoin that large institutions are accumulating over time. Price action is likely to continue upwards for some time until a massive euphoric run in price is likely to trigger a bear market, once the FOMO and parabola becomes too unsustainable. Many disagree about whether this will happen, but all bull runs end eventually, and smart investors will be looking to protect themselves and their gains in all eventualities. Taking profits on the way up and on the way down is the best way to do this and takes away a lot of the risk from holding cryptocurrencies too long. This is what happened to many in the 2017 bull run when they held their cryptos too long after pullbacks, but the price action just continued lower and lower, wiping out their gains. Waiting till the top of the market to sell is a recipe for disaster, because nobody can predict the exact top. In this video we'll be taking a look at Synthetix and the crazy amount of potential it has for the future. Based on the market it's targeting, it could easily 1000x in the future. Make sure to watch the video till the end for all the essential information. This is not financial advice and is for entertainment purposes only. We always stress that you do your own due diligence. Please like and subscribe for daily videos, and hit the bell icon and turn on all notifications. YouTube does gatekeep some cryptocurrency content, so to get access to this time-sensitive information immediately, make sure to turn on all notifications. If you'd like to support the channel more directly, you can sign up to our Patreon via the link in the description below, where you can get access to our private Discord. Welcome to Crypto Maximalist. Let's begin. Synthetix is a project that has an unbelievable amount of potential going into the future. At a current price of around $20 and a market cap of around $2 billion, when you start to look at what Synthetix does and the potential it has for adoption, as well as growth, it starts to appear an amazing investment opportunity. Synthetix has been stalling out for the past few weeks in terms of price action, most likely due to its affiliation and basis on Ethereum. Ethereum is currently experiencing a number of issues with its scalability, and a lot of projects based on Ethereum or working closely with it are also suffering from its suppressed upward movement as a result. The price action of Synthetix and Ethereum in the past 3 months have a clear correlation, so there is likely some sentiment among investors that they want to see the problems that Ethereum is having start to be resolved before more people decide to get into Synthetix. In the short term, this means the price may consolidate for some time, with Ethereum looking to upgrade parts of their network in July to help with scalability significantly. But in the longer term, things will very likely get back on track for Synthetix, and it has an absolutely huge amount of potential when you take a look at the market it's targeting, which is derivatives. It's also important to take note of the bull run's parabola, which could pump at any time. Synthetix is targeting the derivatives market, which truly has a vast estimation in value. Synthetix does this by allowing users to mint tokens called synths, which then track an underlying asset one for one, in the same way that any derivative on the market would, through the use of Chainlink's Oracle technology. We're super bullish on Chainlink on this channel, and this is just another example of its incredible power. This allows for anyone in the market to speculate on the price action of anything that they like, and this is one thing that humans love to do the most. Derivatives in themselves are simply an agreement between two parties on whether or not the price of an asset will go up or down, and which party will benefit in either instance. An example of a derivative might be when someone buys a stock through an app such as Robinhood. The user very rarely will actually own the underlying asset that they've just bought, but they'll just own a representation of the asset, or a derivative. These services are often the middleman to the actual market makers behind the scenes, who buy and hold the assets for the middlemen and then sell them to investors as derivatives. Derivatives then track the underlying asset with whichever agreement is decided on by the parties. This is where things can get more complex, because there are many types of agreements that investors can buy. For example, the most standard agreement is that an investor buys a stock that tracks the underlying asset one for one. A user could buy a Tesla stock on Robinhood, and they would receive the derivative of that asset in return, and receive all the benefits or otherwise of their capital depending on the price movements of the underlying asset. However, there are more types of derivatives that users can buy, such as assets like 3x Tesla, which track Tesla's price movements on a 3-to-1 ratio. This means that the price movements will be 3 times as big in either direction, so the underlying asset isn't tracked directly anymore. This also gets more complex again with the use of leverage, which is offered by most exchanges in the world. Leverage essentially allows users to trade with far more capital than they actually own. For example, if someone has $1,000 and opens a leverage position with 10x leverage, they basically have $10,000 of buying power. This means the overall market for derivatives becomes extremely vast when leverage becomes involved into the equation, and this is why we're so bullish on Synthetix. Synthetix allows for tokens of any kind, including leveraged ones, to be created and traded on their dedicated DEX, or decentralized exchange, called Quenta. Quenta allows for users to trade their tokens in for other tokens such as stablecoins to cash in their profits. Derivatives markets at their heart are all based on speculation, and this is something that Synthetix aims to target with its protocol. When you take a look at Synthetix objectively, it has a massive amount of potential in the future, especially because of the derivatives market. On this channel we look for the 2 key pillars of long-term success in every cryptocurrency, which are use case and adoption. Use case is the solution that a cryptocurrency provides to a problem, or the utility that it gives to improve a specific outcome. Adoption is how much the cryptocurrency is actually in use, and also how much it will be used in the future. When you take a look at Synthetix, you can see that its use case presents an incredible opportunity to get exposure to all kinds of world markets from within the cryptocurrency space, and may encourage new adoption into the cryptosphere as a result. With the value of the derivatives market currently anywhere between $600 trillion and $1.2 quadrillion, there is a vast market out there for Synthetix to capture a share of, and with a current market cap of $2 billion, the increased adoption in the future, you can easily see how the project could absolutely explode in the coming years as it starts to get more and more adoption for its use case. It's already established itself as a top 50 cryptocurrency for some time, and more adoption in the future will likely see it start to climb the ranks. Synthetix is considered an altcoin blue chipper by many analysts, and when you look at Synthetix from this perspective, you can start to see why. When you look more carefully at Synthetix and its technology's possibilities, it's easy to be even more bullish on the protocol. Blockchain technology presents a unique opportunity due to the lack of geographical restrictions on the use of projects around the world. Currently, there are many restrictions based on location of different markets around the world and access to these markets based on politics or other nuances of laws. Blockchain technology essentially allows for global markets to truly emerge, since if a user has an internet connection, they can access and use these systems anywhere in the world. When you also consider that these protocols are decentralized and don't succumb to any of the drawbacks that centralized exchanges currently do, such as decisions to limit trading on certain assets, or having severe problems with downtime on the platform or long periods of maintenance, not to mention that the markets are closed half the week, it's easy to see why blockchain technology is so bullish. The cryptosphere is 24/7 and does not suffer from any of these issues due to its decentralized and secure nature. This means that no one can pull the plug if traders start to do too well in the markets. The combination of all these plus points is all the more reason to be bullish on Synthetix, because it means that billions or potentially trillions of dollars of capital from around the world can start to participate in a global market. And this is one of the most bullish things about Synthetix. When you consider all of this, you start to realize that Synthetix is set to have an incredible future if it can get the adoption that will lead to exponential growth. In terms of this year's bull run, Synthetix could easily 10 to 100x in the next 6 months, depending on how Ethereum performs, combined with the sheer pump of Synthetix and also the entire cryptocurrency space towards the peak of the bull run. Over a longer period of the next 5 years, if Synthetix captures a good market share of the derivatives market in the future, especially considering that cryptocurrency will be thrust into the mainstream sooner rather than later, it could grow far larger than many people are predicting. With a current market cap of around $2 billion, Synthetix is a tiny player in terms of market share, and even if it only captured 1% of the low-end estimate of the derivatives market of $600 trillion, a $6 trillion market cap would put Synthetix at around $60,000 per token, or roughly a 6,000x from the current price. Even just capturing 0.1% of the overall low-end estimation of the derivatives market could see Synthetix at $6,000 per token, or a 300x from the current price. When you start to look at the numbers, Synthetix is a project which more likely than not will have a great future ahead. if it can secure anywhere near these levels of adoption in the next 10 years. So what are your thoughts on Synthetix? Do you think it will 1000x in the future? Let us know in the comments down below your price prediction for Synthetix in the future and your reasons why you are or aren't bullish on this project. We're always interested to know what you think. If you'd like to support the channel more directly, you can sign up to our Patreon via the link in the description below, where you can get access to our private Discord. Currently only around 20% of viewers are subscribed, and we'd love to see our community grow more, so please hit the big red button. Please like and subscribe. We are Crypto Maximalists.